this, and I'll make it available later. So first of all, let's have a look at a basic PDF questionnaire. And I have one here for a retirement plan. And what I want you to notice is that we can brand these for you. And by that, I mean put in a logo, put in a business card. The color set will match the dominant color in your logo, and so on. And then in this submit button at the bottom, we would embed your email address. And the whole point of these questionnaires is to be able to populate them and then use that submit feature in order to import data into VisionWorks. So I want to take you through this because this is what makes creating the retirement plans so efficient. There is a PDF file that explains exactly what to do. So you can see customizing the questionnaires. That's something that we will do for you at no cost. How to use the questionnaires, importing data into VisionWorks, and so on. So everything that we're going to cover today is covered in this PDF file. And the location for it, if you go to the website, and you'll have to log in to access this. But once you're logged in, if you go to the home page, the VisionWorks menu, and questionnaires, you will see here using the fillable PDF form questionnaire link, and that's where you go and download that PDF file. So everything we cover will be on this recording, and then also the paper-based version of how these questionnaires work is on the website. So first of all, a couple of things. With the questionnaire, what we will do is we will provide the branded version, logos, business card, colors. It will then be up to you to put in any text you want, instruction text, disclaimer text, whatever you want to do. And then once you've done that, what you do is you click this freeze form button, and what happens is these gray buttons are then hidden so that they're not available for the client to see. And I just want you to notice this load from FDF button at the very bottom right corner of the last page. So once you've entered your text, you would click freeze form, locks everything in, and then what you do is you would resave the file either in the generic name or a new name that you want to assign. So your options are send this out to the client, have the client complete it, so, filling it in, Bill Smith, etc. Pre-complete known information like name and date of birth, province of residence. Save that file, but not as the generic questionnaire, but save it in the client's name. So PDF file, partially completed, saved in the client's name, and then send it out to the client. Or the third choice, of course, is to actually go through this conversationally with clients and fill it all in. My view is that by and large, people don't like to complete questionnaires, regardless of how simple they are. So doing it with the client, with most clients, is likely going to be fairly necessary. I want to run through just a few things. So you can see parties in the plan, very straightforward, Bill Smith, et cetera, et cetera. When it comes to desired annual expenses during retirement, I want you to notice here the note suggests that clients do not include home expenses, and if they buy vehicles, that they don't include vehicle expenses. Now, this is entirely up to you, whether everything just gets thrown into the general expense bucket or whether you itemize the home and vehicle expenses. But I'll go through and I'll show you why. So you can see here salary, whatever it might be, desired retirement age, and so on. The reason that we talk about home expenses being itemized with homes is because in VisionWorks, if you sell a home, for example, then what happens is those expenses that are linked directly to the home, they end when you sell it. And then, for instance, if you're downsizing, replacing the large home with, let's say, a condo, then the condo expenses will begin the year that you buy the condo. So given that it's relatively commonplace in our society for people to downsize homes at a certain point, which can have a meaningful impact on their cash uses, then we recommend that home expenses be itemized with homes. In the case of vehicles, if you, for example, put the cost of vehicles in general expenses, and if, for instance, you're talking about a two-car family, again, fairly commonplace, then the underlying assumption is that people are still driving two vehicles when they're 85 or 90 or 95. By itemizing the vehicles, let's make that a sport utility, which is fairly straightforward. I pay $50,000 for them, cost me $10,000 a year to run it. I want to buy my next one in 2022, and I want to replace it every 5 years. So if you do that, pretty straightforward, then VisionWorks will import all of that, and then you'll be able to go in and say, but we will cut back from two vehicles to one vehicle at a certain age, and we won't be driving after a certain age. And it can actually make a profound difference on the plan, and we'll go through that a little bit later. And then other than that, what kind of return do you think you've been earning on average? How much is in your TFSA? Do you contribute the maximum every year, or what do you contribute? Same with RSPs and so on. So it's relatively straightforward. Now, one of the issues is this. What happens when the client has completed the questionnaire is that the client will hit the submit button, be able to enter a password. I personally don't think it's particularly necessary. I'll explain that in a moment. What happens is that a data file is extracted from the questionnaire. And the data file not only has the data in it, salary, for example, but it also has an address system. And it's the address system that maps against VisionWorks that allows all the data in the questionnaire to be imported. So if the client has completed the questionnaire, click the submit button, your email address is embedded in that submit button. The email comes back to you with the data file attached, and what you would do is you would right-click on it and then save that wherever you wish, and you would save it in the client's name. My suggestion is that you use the default location, which is Documents, Vision Systems, VisionWorks, and the Questionnaires folder. And you can see that I've added some FDF files, the data files, to this folder, and I've saved them obviously in the client's name. So again, client hits the submit button, a data file is created, they send it to you. The reason I don't think it's necessary for password is because these data files cannot be opened on their own. The data has to actually be opened into the form that created it. So if anybody intercepts an FDF file, they can't do anything with it unless they have a VisionWorks questionnaire. And I wanted to show you this because you'll remember I spoke about that load from FDF button that we've now hidden when we click the freeze form button. The issue that you have when clients send you the FDF file is you don't know whether they've completed it accurately or not. And again, you can't just open it and look at it. So what you can do is open the generic questionnaire, click that place where the hidden load button is, then go locate a data file. So I'll go back to Documents and Vision Systems, VisionWorks, my Questionnaires folder, and here's the data file that I use. This one we'll use from May. So I just need to click Open. If the client used a password, I would have to re-enter it. So, you need to make sure that you get that from the client. But once I've clicked the OK button, then what happens is all the data is now loaded back in the questionnaire, and I can run through it and make sure things look relatively complete. Two things that clients will often not complete. One is their desired retirement income. For them, the question could be, we're trying to figure out what we can afford to spend, so they might leave that blank. The math behind a retirement plan, however, is what have you got in the different pots, TFSA, RSP, what are you contributing to those accounts every year, what rate of growth is being earned on them, when do you want to retire, what income do you want, and therefore whether or not those accounts, those pots will last given the drawdown rate, based on your desired income. So we need what is that desired income for the math to work. So if somebody sends you something and they don't complete it, you can put in anything at all just as a starting point. The other thing is the desired retirement age. Again, it could be a question, we're trying to figure, we know what kind of income we'd like, but we want to figure out when we can retire. So if they leave this blank, what VisionWorks will do is it will just default to age 65. So it's at least able to do that, and then you can go in and make some changes later. But otherwise, you can see that everything is relatively straightforward. So what I'm going to do now is I'm going to close this. We'll assume that the client completed this and sent it back, or you sat with a client, completed it. All you need to do now is run VisionWorks. You're going to click the Add button. I'm starting a new plan. I'm importing from the questionnaire. It's a retirement plan. You'll give it a name, so I'm just going to call this Smith RA for now. And I would recommend using a little code. So RA for or RP, let's say for retirement plan, REP for retirement and estate plan, FP for financial plan. They have different functionality, so we want to make sure we remember which kind of plan we were creating. So I'm just going to call that Smith RP, and then I can go and locate that data file. So here's the one we were looking at. Open it up. Again, if the client used a password, you need to enter it exactly to decrypt the data. Again, my feeling being that it's not really necessary. And what ends up happening is that the data is now imported, and everything that was in that questionnaire is now in VisionWorks, and the whole plan is set up. So you can see we have Bill and Sue. As far as life expectancies, 91 for Bill, 96 for Sue. Those are the FP Canada suggested life expectancies. But if you click the Edit button, you can go in and change them if you wish. If we go down to Settings, the FP Canada assumed inflation assumption is 2.1%. So again, we're using that. Although you could use that as a government rate, income tax brackets, OAS, CPP indexation, for instance, but you could have a general inflation rate, groceries, that could be different from your government rate assumption. If we go down to entries, you'll see here, for example, that we had the home and we imported it, and notice that we also imported property taxes, again, right out of the questionnaire, and they're directly linked to the specific home. If I go up to Bill and we look at career, for instance, we can see his salary said he makes $70,000 a year. He wanted to retire at age 65, which for him is 2025. So that was automatically entered, the retirement age, from the questionnaire. If we go to Sue, she also makes $70,000 a year, and she wants to retire at 60, which will also be 2025. So she wants to retire at the same time as Bill. And then if we go down, for example, to RRSPs, you can see her contributions were imported. Notice in the last year they're less because she retires partway through the year. The value of portfolios are imported. and so on. And that's just a starting point. In the questionnaire, clients could enter their assumed rate of return, what they think they've been earning, and then that's just used as a capital gain rate for something that's just a basic starting point for investments. If we look at income assets, you're going to see that in this particular file, it's a complete disaster, that the clients are not nearly accumulating enough given the spending that they want to do in their retirement years. And I've done this quite intentionally to show a very large shortfall. Before we have a look at the output, though, I want to just show you one of the key considerations behind retirement plans versus regular cash flow-based plans. In regular financial plans, cash flow-based plans, we're interested in income and expenses as much today as through the rest of the plan. So it's cash flow-based throughout the course of the whole plan. What I want you to notice, though, with these retirement plans is that up to retirement, 2025, you'll notice the general expenses entry is actually zero. And then our $60,000 desired income in retirement kicks in 2025. And the reason for this, retirement plan, retirement and estate plan, it's different from a cash flow-based financial plan that's cash flow-based throughout the whole plan. In this case, what we're doing is we're assuming that what is not being saved, by which I mean contributed to TFSAs or RSPs, for example, what's not being saved is being spent. So there are only two things you can do with money. You can either keep it, contribute it to a TFSA, RSP, save it in a bank account, whatever, or you can spend it. So a retirement plan is focused on retirement. Are you accumulating enough for retirement? So again, what have you got in the different pots? What are you adding to them every year? What rate of return are they earning? What will the pots grow to come retirement? And then what's your consumption rate, in this case $60,000, and will the pots last? So in a retirement plan, we're merely interested in what's your keep, TFSA, RSP contributions, and everything else pre-retirement we're going to assume is being spent. Don't care where, just know it's being spent. So that's one of the major concepts. The reason that we talk about home expenses and vehicle expenses, if we go to the home, I'll just give you a for instance. You can see the property taxes run out to 2061, which is Sue's life expectancy year. She lives longer than Bill. But if I go in and say, well, in 2030, we want to downsize, all I need to do is, select cell, put in some date, I'll just make it June in 2030, click the save button, and now when I go back to property taxes, you'll see that they now end in 2030. So this makes it very convenient. I could then create a townhouse or a condo, for instance, and put in the purchase date in 2030, and then the expenses would begin then. And again, there could be a considerable difference between what we're spending on the current home versus what we might be spending on the new home. The reason for vehicles is because they can have a very profound difference on the plan, make a very profound difference on the plan. So in this case, we've got the car. So the question to the client is merely, are you still going to be driving two vehicles when you're 95? And the answer would be typically no. So the software just imported everything as if, these vehicles will continuously be bought. But let's assume for this a second that the client say, well, we'll buy the last car when we retire, and we'll drive it for, let's say, 10 years. But by that point, 75, we don't need two cars anymore. So we can just right-click, get rid of these vehicles, and then, similar to the house, we put in the final year when we're no longer going to be driving the two cars. So I'm going to make that 2035. And when I do, that will end all the related vehicle expenses. So we'll see the impact on the plan. You can see that right now we're minus 3.3 million. So by being sensible about the vehicles, we go from minus 3.3 to minus 2.8. So we've dropped off nearly $500,000. And the reason, of course, is we don't have those inflated operating expenses anymore after 2035. We don't have the vehicle purchases after 2025. And because we're not spending the money to the degree that we're retaining it, we're also earning a return on it. So it's a double-edged effect. And then, of course, I could go in and do much the same thing with the sport utility. Say, for example, that we'll buy the last sport utility, let's say in our early 80s, and let's say that Sue continues to drive until she's 90, which is 2055, and we'll make that adjustment. Now, the change isn't as big, but what's happened is we went from 3.3 negative to 2.6 negative. So vehicles represent a substantial expense over the course of people's lives, and I strongly encourage you to include those in a plan. I'll show you one more thing that I would also include. Well, actually, I'll show you a couple of things that I would include. One is that rather than throwing all those general expenses into a single bucket, we've itemized homes, we've itemized vehicles. But what I would do as well is I would itemize any lump or any large expenses that the clients anticipate in their retirement years, and I would separate them out in order to be able to discuss them individually. And the classic example of this is vacations. So let's just assume that out of our $60,000, we were expecting to spend $10,000 on vacations. Remember, the $60,000 is over and above our home and vehicle operating costs. So what I'm going to do is I'm going to drop those expenses down to $50,000, the general expenses. And what I'm going to do instead is I'm going to add a vacation expense, and I'm just going to use the winter button. But I want you to notice I can now go in, right-click, edit the text, and I can just call this Take Vacations. So I can make it fairly generic, my annual vacation expense. And what I'm going to do is I'm going to make it $10,000. So we dropped general expenses by 10. We've added vacation expenses of 10. So it's the same total, 60,000. But the point is that we're not going to be spending $10,000 on vacations when we're 90 or 95. And you'll notice that this is well over $20,000 just at a 2% inflation assumption. And those $20,000 are all after-tax dollars. So again, itemizing something like this, I think, is very important. So what I'm able to say is, okay, come retirement, I want to spend $10,000, but I'm only going to spend that, let's say, until age 80. So I can end it, or maybe I could go in and I could, drop it down to $5,000 and run that out for 5 years or something like that, whatever I might want to do along that line. I'm just going to end it. So you remember, I think our income assets were minus 2.6, and now they're minus 2.3, so a few $100,000 difference. So those are a few of the things that I wanted just to discuss. So going back, what we're talking about then is the PDF questionnaire. Either send it to the client for completion. They may or may not complete it correctly. So you'll need to import the FDF file back into the questionnaire to double check whether it's being completed. Because people resist questionnaires, my suggestion is you consider filling it out with them. The point is that the questionnaire is very easy to complete, and then when you do an import, all of the main entries are going to be put in their correct place. So I think you'll just find it very time efficient. And then from there, what you can do is you can begin to evolve the plan. And the things that I would look at would be itemizing vehicles so that we can say, you know, what is realistic here, itemizing vacation expenses instead of putting them into general expenses, just so that we can end them at some realistic age. There are some other things that we'll eventually look at as well. Under tactics, for example, we'll look at things like tax tactics, sharing CPP, splitting pension income. But we'll do that after we've covered retirement and estate plans, which is what we're going to do next week, where we add in the terms of wills and also do insurance calculations. So what I'm going to do now is I'm going to open this up. Sorry, there is a chat message here. Let me just have a look. What I want to do now is just open this up to any questions people have. And to ask a question, all you need to do is press *6 on your phone, and then you will be unmuted. And then once you've asked the question, if you would press *6 again to mute yourself, please. That's just so that we don't end up with a lot of background noise. So *6 for anybody who wants to ask a question. Anyone?
Hi, Mike. It's Mike Fraser here.
Hi, Mike. How are you?
I'm good. How are you?
Well, thanks.
Good. So just a couple of quick questions. You made reference to someone is putting in their retirement income. What happens if the person is going to be partially retired? So they're, maybe they're going to be drawing down on RSPs or what have you, but they still continue to consult and do whatever and make whatever $4,000 a month, partially retired. Perfect. For 6 years.
Yeah, absolutely. So for a retirement plan, we use the concept of, desired retirement date. You won't see that actually in financial plans. There's no field in VisionWorks where you go in and put in, this is where when I'm going to retire. The way retirement works in the software is merely when your salary ends, in this case 2025, that means you're retired. You're no longer earning a salary. And the reason we don't do that standard retirement thing is because it's exactly what you're speaking of. It's very common in today's world for people to have a second career. So it might be I'm going to hang up my skates at 60, no longer work for the company, but what I'm going to do instead is I'm going to start a small consulting business, and I'm going to start my consulting business in 2026 after I retire, and I'm going to run it for the next several years till I'm 75. However, also what's true is that I'm not going to start at whatever income that is. So I can actually go in and say, in the first year, maybe I'll make $10,000, not much at all. But by, year 5 or whatever, maybe I'm making $50,000. And this type of graph that I'm about to show you, you can see this is one that steps up. But I can switch to the graph type to what we call a gradual graph, and you can see what's happening here. Sorry, I should have made that 10, is that the income is going up gradually over time until I hit what I think will be, my income level. So absolutely, you can have income in the quote unquote retirement years. Very commonplace in today's world, very commonplace. And again, it can be a big factor in the overall plan as well. Other questions?
Yes, I have a second one actually.
Good.
Okay, so as I was talking to you yesterday about the My Vision of Life website, and I know that there's some nice things coming down the pipe on that. And so when someone uses the My Vision of Life website to, and I'm not familiar with it completely yet, so I apologize, but is it somewhat similar to the questionnaire, or is it pretty much just sort of, you know, helping people to sort of picture their life a little bit, or, you know, choose their, I guess, what's important to them in life, as you said before, but is there actually any data entry being done during the My Vision of Life interview, or whatever you want to call it, or is it like a questionnaire?
So let me back up for a second, and I will get to your question. I want to just sort of take you through a thought process first. There is a word or a term, referent, and I speak about this all the time. What it means is that we all understand concepts by referring to what we think we already know about that concept, or something that is very like it. So when you say financial planning to somebody, regardless of what you may mean and what you're able to do for clients, they have in mind what a financial plan is. And in this day and age, in my experience, what's happening is that financial plans are becoming about retirement plans. And that I don't think is at all necessarily true. Where we're going to go with all of these webinars is to get much more into life plans, because life plans are as much about today as they are about retirement. And I would suggest to you that people do not sit around the dinner table and talk about their retirement plans. They talk about renovating the kitchen, whether they can afford to, how much they can spend, and so on. And what a life model does is it helps them actually make those decisions. So to get them there, which is where I think the greatest value is, it's the management of life, if you will. I'll actually use mastery. To get them there, given their referent, which is retirement plans, I'm not sure I'm going to get a lot of value. I can get them for free at the bank. You're just using them to sell me product. It goes on and on and on. If we say to somebody, let's do a plan, their referent may be such that they don't think they're going to get a lot from it, and so they're nice and polite, and they say, Mike, sure, just let me know I'll be okay in retirement. What you're able to do then is to start with a retirement plan just to get them going, then start to show them value. And a lot of that value, by the way, is going to come out of just doing the tax calculation. Now, I hesitate to do this only because in this particular plan, Bill and Sue earn the same amount of money, they have the same in their RSPs, et cetera, et cetera. So there's not a lot of tax optimization that can happen. But in any event, if I click the Optimize button, it will go through and it'll actually figure out what they should do. In this case, share CPP, split pension income. They'll save $42,000 in taxes. Actually, it'll increase their OAS clawback, so they'll get a net $22,000. But because they're better off by $22,000 and that money stays invested, et cetera, the whole plan difference is actually $47,000. So we can show them things that will very easily, that will save them taxes, be worthwhile, and try and engage their interest. Once we've done that, then if we want to get them more involved, and if they want to step up to the plate, so to speak, the way I look at things is somebody's values and their vision, they're the expert on those. We're the expert on the financials to help get them from where they are to where they want to be. So the whole point then of the My Vision of Life site, let me go back to VisionWorks, is that I can actually take this starting data and I can export it out to the My Vision of Life website. And you can see I've actually got a Bill Smith in here. I've got a few Bill Smiths in here. where this data, excuse me, has been imported out to the My Vision of Life site. And then what the client's able to do is go to that site and you can register them and set everything up. So I'm just going to do my Bill Smith here. But you can actually register them on the site and set it up when you do the export. And then you'll have the Bill and Sue Smith in the My Vision of Life. The clients can then go in, play with their values or go into their vision. And what they're able to do, for example, is to go to the home page and then start putting in things that, maybe weren't initially covered, like they want to renovate the kitchen or they want to landscape the backyard or whatever it might be. So, excuse me, it gives clients the opportunity then to amplify on that vision, make it far more robust. Some people will, some people won't, but at least it gives you the opportunity to allow them to get more involved. Or you can simply, walk through it with them, talk to them, build your relationship, or they can be hands-on. The point is to give you the tools so that you can work however you wish to work. Does that answer your question? I know that was a long-winded answer, but it's to gradually, it's the concept of referent. We understand things by referring to what we think we already know about those things, and the referent for a financial plan is not always that engaging for people. So we need to be able to show them that what we do is substantially more valuable, worthwhile than what other advisors are doing, and to gradually bring them into the process.
Yeah, no, that's great, and that's exactly what we need in this world. We need to be able to differentiate ourselves from everyone else. And a perfect example is I was working with a client, as I may have mentioned to you yesterday, and $1 million file, and they just go into one of these big shops and go to the 25th floor and do a KYC, and then they give them the 60/40 off-the-shelf balance plan with some nice pie charts and what have you, and they sign up and away they go, and that's $1 million file. But meanwhile, they have no idea how it's going to play out in 15 or 20 years. So that's why, okay, that's great. Thanks.
Okay. Anybody else with a question? Anyone? Remember *6 to unmute yourself to ask a question. Well, if there are no further questions, we'll end this webinar. And I am recording it, and I will put it up on our YouTube channel just so that you are aware of what to do. All you need to do to look at any of the questionnaires is to go to the website and just click the YouTube button in the upper right corner, and that will take you to our YouTube channel. And then any of the, no, it's just slow today. And then any of the webinars that we're doing will be listed here. So thank you again for your time today. And on Friday, we're going to be looking at the bottom line, so to speak, of output. We'll be talking about what I call the 3 C's and 5 main plan themes. And then for the beginner group, so to speak, next week, what we'll do on Wednesday is we'll take our retirement plan and let me just reopen it. And what we'll do is we'll just click the edit button and we'll upgrade it to a retirement and estate plan. All we need to do is click that option, click OK, it automatically upgrades, and then we'll start looking at wills and how insurance calculations are done. So again, thank you for your time today, and if you have any questions, please send me an email or give me a call. So thanks.